Okay, so guys, let us take on this example on cost sheet that came in 2006 May examination. Let's go through this question. Very different, very interesting question. Let's go ahead and read the question. Esma.
XYZ Auto Limited is in business of selling cars.
Okay.
It also sells insurance and finance as a part of its overall business strategy. The following information is available for the company. Now, sale of car physical units 10,000 cars, and the sale value is 30,000 lakhs.
Okay, in that particular period, your company sold 10,000 cars valued at rupees how much? It is 30,000 lakhs. Next.
The next, sales of insurance 6,000 policies at 1,500 lakhs.
You are able to sell 6,000 insurance policies. And what is the policy value?
1,500
It
lakhs.
is 1,500 lakh. Next.
Next, sales of finance 8,000 loans and rupees 19,200 lakhs.
Okay, 8,000 loans have been issued. And what is the loan amount?
19,200 lakhs.
200 lakh is the amount of loan that has been disbursed. Next.
The revenue earnings from each line of business before expenses are as follows. Sale of cars 3% of sales value, sale of insurance 20% of sales value, and sale of finance 2% of sales value.
Just come again.
The revenue earnings from each line of business before expenses are as follows. Sale of cars 3% of the sales value, sale of insurance 20% of the sales value, sale of finance 2% of the sales value.
So basically, your company is not manufacturing cars, right? It is an auto dealership selling cars. You also issue, arrange for insurance policy and also arrange for loan. So it is given 3% is a dealer's commission, and that is the income for the dealer, right? Now, when I say revenue for your company as a dealer, it is not the 30,000 lakh. It is only 3% on rupees 30,000 lakh. Got it?
Yes, sir.
On the cars sold. And as when you go to arrange for the insurance policy, as an agent, you will earn a commission, right? Which is 20% given. And then when the loans are issued, you earn something called a processing fee on the loan, and that is your revenue. Got it?
Yes.
So therefore, 3% on the sale value for cars. For insurance, how much? 20% of
Sales value.
the insurance value.
Sales value.
That is sales value of insurance policy. That's the meaning. And 20%
2% on sales value for finance.
for finance. Next.
The expenses of the company are as follows. Salesman salary rupees 200 lakhs.
It is 200 lakh is a salesman
Salaries.
salaries.
Rent rupees 100 lakhs.
Okay.
Electricity rupees 100 lakhs.
Okay.
Advertising rupees 200 lakhs.
Okay.
Documentation cost for insurance policy rupees 100. Documentation cost for each loan rupees 200.
Each
And
loan how much?
200.
200. Okay.
And direct sales expenses per car rupees 5,000.
Okay.
Indirect costs have to be allocated in the ratio of physical units sold.
Very clearly given that any indirect cost which are not relating to any particular product sold. What are the three products? You are selling cars,
Insurance.
you are selling insurance, and also issuing loans,
Finance.
arranging for loans, right? Finance. So basically, there are three products that you're dealing with. That is a car, and then a sale of cars. Number two, sale of insurance, and also sale of loans, right?
Yes.
That is arranging for loans. Yes, ma.
Required number 1, make a cost sheet for each product allocating the direct and indirect cost and also showing the product wise profit and total profit. Then number 2, calculate the percentage of profit to revenue earned from each line of business.
So basically, you're going to make an income statement. Don't think cost sheet means prime cost and then add factory overheads. See, that is for a manufacturing concern, right?
Yeah.
And here you are a dealer.
Dealer.
A dealer selling cars, you earn dealer's commission, you earn some commission for arranging for insurance policy, and also earn some processing fee when you arrange for the loans. Is that fine? Now let us go ahead and make an income statement for the 3 products and ascertain the profit you are making on 3 products, and also find the profit as a percentage of revenue earned by your dealership. Is that fine?
Yes, sir.
Now let's go ahead with the statement. Yes,
Yes, sir.
the solution.
Yeah. So product cost sheet, particulars, total, cars, insurance, and finance are the columns.
Okay.
So sales units under cars 10,000, per insurance 6,000, finance 8,000.
So these are the number of units sold. You sold the 10,000 cars, and then how many policies?
Insurance 6,000.
6,000 policies,
And 8,000.
and 8,000 loans have been issued. Next.
Sales value rupees in lakhs.
As given.
30,000, 1,500, 19,200.
Those are the sale value. That's a gross amount. But you will not earn that money. You will earn only 3% on
20%.
30,000 lakh. And then 20% on
1,500.
1,500 and 22% on
No, just 2%.
2%. 2% on
19,200.
okay, 2%. That's why I was wondering, 22 is huge, right? So processing fee 2% on loans.
So revenue earned rupees in lakhs. Total 1,584, which is on car it is 900 lakh.
Which is
3%.
3% on 30,000 is 900.
Then 300 lakh on insurance.
Which is 20% on 1,500, which is 300.
Then 384 lakh on.
Nothing but 2% on 19,200 lakh. That's your processing fee, right? 22%. And adding up all the 3, how much?
1,584.
That is a total amount of revenue earned by you people. Got it?
Yes, sir.
Next, less.
Less direct cost.
Yes.
500 for car, which is 5,000 rupees per car into 10,000.
Now, what is that? Basically, you are paying some salesman commission, I suppose.
Yeah.
The
Direct expense.
What is given? Expense? Can you go back to the question?
Direct cost, sir.
What is given?
No, it is a direct cost.
What is
Direct sales expenses per car 5,000.
It's given in the question.
per
5,000 rupees per car into 10,000 cars.
And for insurance, it is given as rupees 100 per policy, and for loan, it is 200.
So what are you going to do? Rupees 100 into
6,000
policies. How much you get?
Lakh.
It is 6 lakh. Rupees in lakhs?
6.
It's going to be 6.
Yeah.
And the rupees 200 per loan issued. That into
8,000.
8,000 loans. How much
So
you get?
16 lakhs, so 16.
So these are the direct cost given for each of the 3 products.
Then 522 total.
Okay, next.
Next is the indirect cost allocated in the ratio of physical units sold.
That is in the ratio of 10,000 is to 6,000
Is
is
to
to 8,000. And you can add up all the indirect costs.
Yeah. So salesman salary 200 lakh, rent 100 lakh, electricity 100 lakh, advertisement 200 lakh. In all 600.
The 600 lakh should be
apportioned
in the ratio of 10 is to 6 is to 8. Now how much you get for car?
They put one unit ratio 0.4167.
Nothing but what they did, 10,000 divided by
the total,
24,000.
That ratio.
They got a nice number.
0.4167 is to
67 is
0.25 is to 0.3333.
So what you can do, you can take 0.4167 into 600. Now what is 600 lakh into 0.4167?
So we take in 10 is to 6 is to 8 ratio, we'll get the same number, no?
Same number, will not change. You can do that. You can do 10 divided by 24 into 600.
600, 250.
You will get 250. Is that fine?
150 and 200.
It is 150 and then
200.
200.
So total cost.
That's total the direct cost and the indirect cost.
It is 750 for car, 156 for insurance, and 216 for finance. Total 1,122.
And then you balance and find the profit for each product. How much you get for car?
150 for car, 144 for insurance, and 168 for finance.
So these are the profit numbers
Total
right?
462.
That's a total profit. Now you've been asked to find the profit as a percentage of
Revenue.
the revenue earned by your dealership, right? Next line.
So percentage profit to revenue earned 29.17% total.
Now how do you total? That's okay.
Car it is 16.67%.
How you get that? Divide 150 by 900.
Yeah.
Don't take 30,000. That is not your income at all.
Yeah,
As a dealer, it's only your dealer's
Commission.
commission is the revenue.
Yes, sir.
Therefore, what you should do, divide 150 lakh upon 900 lakh into 100. How much?
It's a 16.67%.
And then for insurance,
it is 144 divided by 300 into
100, how much?
48%.
48%. And how much for loans?
Insurance, finance, it is 168 divided by 384 into 100, 43.75%.
So that is the profit as a percentage of revenue earned by you people. Basically, you should take your net profit by the commission earned on selling insurance and divide the net profit by the processing fee earned on the loans arranged. Is that fine?
Yes, sir.
Even for a car, calculate the profit as a percentage of the dealer's commission you earned, 3% on 30,000 lakh. Is that fine?
Yes, sir.
Guys, a wonderful sum that came for 8 marks in the year 2006 examination. Learn this sum really well for your examination Jan 25. Is that clear?
Yes, sir.
Okay.